That's where we open today. So I would be keying on that on the downside. I mean, on the upside, I don't. I mean, on the upside, I don't.
All right, ladies and gentlemen, welcome to the session here. My name is Rodrigo. Today we're going to go over the Benzinga Trading School live demo. So basically, I'm going to give you guys a sneak peek into what's happening in the Benzinga Trading School. We do have a live class that is ongoing, and I'm going to show you a little bit of the class. However, it is possible that Mark Putrino is here joining us. So just keep that in mind, folks. Let me go ahead and get this thing set up so I can start sharing. But yeah, it does come with Pro. I'm going to show you a little bit of Pro as well. We do have some limited time today, so keep in mind we're going to have to finish before 2 p.m. here. So we have to do everything pretty much before 2 p.m. Um, okay. All right, just making sure we have everything set up there. Okay, 1 second, folks. We haven't started yet. We're not in it yet. But this is the live class. We can watch a little bit of it if it's still live right now.
Option of a smaller American Rescue package, and I believe blah 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 that she said it. Huh. So this is a contradiction here. Hey, Rodrigo, how's it going? Well, I don't know. I guess this will be one that doesn't end up on the shelf behind me. I mean, who would actually write? I mean, who would actually read this other than like her family? Um. All right. All right. So we've established um, we're not going to be reading Mrs. Yellen's biography. All right. See you later, Cyber. Um, what's the TikToker for Talio Inc? Oh gosh. Uh, that's like that's like that's like almost the book you would buy for someone as like a joke gift. You know, it's like, hey man, I got you Jenny Yellen's biography for Christmas. Oh gosh, that would be too funny, man. um, yeah, that's too funny. All right, so let me try to gain some composure here, so we can take a look at some serious stuff. Um, but again, going back to our concept of some price levels are more important than others, we can see that here with Tupperware. This $20 was support here, $20 was support here, and then it converts into resistance here. people bought, assuming they still hold her, and it went lower. They tell themselves they want to get out, so they place but they don't want to lose money, so they place their sell orders at 20. So that's why support levels can turn into resistance levels. So RGBX, wow, or wait, what is Mr. Steven asking there? Talio Inc. I don't know. If it doesn't look like there's TALEO. Oracle is ORCL. So let's see what we see here. Qs. So what's going on with RDBX? Redbox Entertainment making a move. All right. So what's going on here? All right. Now, if I'm watching this and I'm a short-term trader and I'm starting to think, all right, well, where should I sell this? Where should I think about having my sell target? And I would say the answer is probably pretty darn close to where it is right now, because the last times it got up here, it hit resistance, and resistance can stay intact for a while. So I would say it's testing resistance now, around 780, 775. But will it break out and move higher? That is the ultimate question. I mean, if you're a short-term trader, you might be thinking, well, if you're a day trader, like maybe here's the time to take a profit. But a little bit of a longer-term time horizon is this would be something to consider, right? We see our old friend, the ascending triangle pattern. We don't really talk too much about a lot of the patterns because I think a lot of them are frankly kind of bogus, and they're, I just don't think there's a lot of validity. But this makes sense, and it's easy to understand. You have a group of sellers up here around 775, 780, and when the market's going higher, there's not enough supply to fill all the demand. So the buyers are forced to pay these higher prices to try to acquire shares. When we get up to a resistance level, the dynamic changes. All right. There's enough sellers to fulfill all the demand, and that turns the market around. Then we go up and we get back up here again, and the same thing happens. So we've had these sellers hanging out around 775, right? But the buyers are becoming more aggressive as time goes by. They're willing to pay higher prices. And those dynamics of complacent sellers and aggressive buyers look on a chart, they manifest themselves on a chart that's something that looks like the ascending triangle pattern. So these chart patterns aren't like reading tea leaves if you understand the dynamics that are behind them. Let's see what Boris asks here. AERC, we were looking at that yesterday. Aereo clean. Yeah. Let's see. I think the actual reduction of supply does not support the price increase we see. Well, if everyone is so concerned about inflation, why would they not set a cap for taxes on gas? Well, because if they make gas too expensive, if they make it not profitable, then companies aren't going to produce gas anymore. So they can raise taxes until they it's at 666. Gotta be careful. I don't know who's that. Yeah, I mean, if they put a cap on the price of gas and it was low enough that the gas operators wouldn't make any money, they just wouldn't bother selling gas. So I know Rodrigo is here, and Rodrigo likes this stock, HUSA. So I want to review this again. I know we looked at it before, but it's just a really good example of how we can look at levels that were support converting into resistance. So here back in March, it was support around 590, but then it went lower. So a lot of the people that bought it at 590, assuming they still held onto it, they're looking at a loss. So they tell themselves, hey man, if I can get out of this at break even, I'm going to. So they place their sell orders at the same level they bought at. Please let us know what Mark's trade is. Yeah, XLF 30. All right. So yeah, so this is what all right. You got it right, Seth. So anyway, let me just look at this here, and then we'll look at those other things too. So support can turn into resistance. Now it looks like this resistance could be breaking. A lot of this depends on where the price closes. A lot of times, if we have these big moves and there's nothing driving them other than like some chat room story somewhere, the moves usually aren't sustained, and the stocks end up coming back in. So now, if we go back to the day trading world, I would say this 635 level is important. Actually, when we started the class, yeah, see, look at that. When we started the class at 12 here, right? We were looking at this, and I said the 635 level is important. So somewhere in between now and then, about 14 minutes ago, HUSA got down to 635, and it's rebounded. So my play on this, I would be thinking, if this thing breaks this 635 level, it's probably going to sell off into the close. So I would be looking at that for the reversal there. All right, to recap here on what Seth is saying. Well, Seth has to go, but I'll recap for everyone else. So we'll just go through the market here. So SPY is, it's another day, it looks like, of range-bound trading. We're pretty much right where we've been for the last 1, 2, 3, 4, 5, 6, 7 days. Now, for the market, for this, all right, well, actually, let me start that again. So SPY, we're looking at 415 for resistance, and we're looking down around 408 for support. So, question, what could break us out to the long side or to the upside? Because, like I said, there really doesn't seem to be many things that to be bullish about right now, other than negative sentiment. But if the market wants to go higher, we'll let it tell us. It'll tell us by breaking this level, and the market's always right, and we're not. So we got to let the market tell us. So I would say, in order for SPY to break out above 415, we're going to have Apple trade back above the 151 level. Right? It's having a nice move today, but it's still well below it. We're going to have Microsoft trade above the 270 level, and it's testing it right now. And we're going to have the financial sector, which XLF is the ETF that follows the financial sector. We're going to have the financial sector break above 36. So I think those three things have to happen for the market to make a significant move higher. And what would tell us that it's going to go lower? Well, I would look at the technology sector and watch this important 138.50 level here. We can see we're above it now, but if we start to break down in technology, that's going to take the whole market lower. But right now we're still range bound. Yeah, so Apple, so we got to watch Apple, we got to watch Microsoft. So this goes back to our whole philosophy of the way we look at the markets here. We don't come in like guessing, like, you know, like we don't come in, I guess, with like guns blazing every day, so to speak. We try to, the best way to do it and the best way to be successful is to try, and you know, it's not easy, but to try to have some kind of agnostic view, because if you come in and you say, hey, I think the market's going down, you're going to get yourself biased to seeing things in a negative light. If you're biased and you think the market's going down, you might ignore the fact that XLF is getting above 36 and Apple's getting above 151. Yeah, all right. So these are the trades we talked about yesterday. I think Halliburton, I think, could break out, and I think this HP could break out. Yeah, HP. Yeah, see. Now this is the sign of a healthy move higher. We run into resistance, breaks through, then the resistance level converts into support. So when you see this conversion of resistance going to support, that's usually sets the stage for another move higher. And this is because we have seller's remorse. People sell, they watch it go higher, they tell themselves they want to buy it back, but they don't want to pay more than they sold it for. So as a result, you have a large number of investors placing their buy orders at the same level they sold at. In this case, 50-50. So that's why a resistance level could turn into support. So when markets rally, that's what happens. They don't go straight up. They go up in like a succession of trading ranges, like a staircase, kind of. And each trading range is higher than the one that was before it. And what was resistance in the prior level shifts into support into the next range. When that process stops happening, that's when we know that we're getting close to a top. I meant state taxes. Yeah, I don't know, man. I don't know. Here in Connecticut, they said they're going to cut the taxes. I guess every state is a little bit different. And if you tax people too much, they're just going to not drive as much, and you're going to get like a negative thing. Like like that's one of the problems that Connecticut's actually having. There is literally like a couple, maybe 4 or 5 hedge fund billionaires that pay such a big percentage of Connecticut state tax that these particular people are actually moving to other states down to Florida where there's not as much tax because they just are sick of paying such high taxes. Like for instance, the guy who owns IBKR. This guy lived in Greenwich, right by where I am, and as far as I know, he has moved to Florida. So when you're making $1 billion a year and your income tax is 8%, you save yourself $80 million a year by moving to a state where there's no income tax. So, let's see. Could I look at FCX? Should I get on hold or get out? I have like 50 stocks. Wow, that's a lot of stocks. All right, I'll take a look at FCX. Freeport McMoran. I think it's got some room to run. Yeah, I would be looking at it, Seth. If I was, I don't think it's got significant room to run, but I think if it gets up to around 45, this was important resistance before. It was also support here. So I'd probably hold on to it, maybe for another day or two. One thing you can do is just put in your uptrend line here and just stay with it as long as it's above this uptrend line. I don't know if any news is coming out. Make sure they're not reporting or something like that. But yeah, I think it's got some room to run. And also, too, remember, fast move down, fast move up, because one of the reasons why there's resistance, is because buyers bought and the stock goes lower and they tell themselves they want to get out, but they don't want to lose money. So they place their sell orders at the same level they bought at. When something falls really fast through a bunch of different price levels, like happened here, there's just not enough time for a lot of buyers to get involved. So you're not going to have that. What you would typically have is the remorseful buyers trying to sell in this range. I mean, there's going to be some, but probably not as many. So I think that means that this could probably move up another $1.50 relatively easily. XLV at resistance, Ronnie says. Oh, how's your investment group working out, Ronnie? Be interested in hear that. Hopefully it's going well. All right, so you're saying XLV at resistance. Now you have a shorter term time frame. So I'm going to put this down to a 1-day chart. Actually, you know what? I'm going to go to a 5-day chart. And if I can see what you're saying. No, all right, cool. Yeah, I see right off the bat. I see what you're looking at. Right there. So this is a 5-day chart here. But the same rules apply as on longer term and on shorter term. It's the fractal nature of the markets. So I would look at this and I would say, I'm seeing resistance right where you are, which is pretty much right where we're trading now. But here we have the quick move down back on June 6th, which was yesterday, right? So it could be the same principle here. If this resistance breaks, there might not be a lot of sellers in here because we had this fast move down. So next level would be up around, I mean, I know it's not that dramatic of a move, but I guess if you're a day trader and you're trading options, it could be. Next move, I would say the next level, or if it breaks current resistance, I would say the next stop would be probably up around here, around 130.75. So yeah, I would concur with that. I mean, I still think that this is a buy here. I mean, I still think that we got inflation. It is not going away anytime soon. They're talking about, by the end of the year it's going to be 4%. Well, these are the same people that were telling us it was inflationary last year. So that's what we need to keep in mind. There's all these different commodity-based ETFs that we can use to trade and take advantage of these moves in commodities. So you don't need to be a commodities trader anymore to actually trade commodities. You could just trade the ETFs. That being said, let's go on with natural gas. All right. So I know Chad bought some cold. I don't know if any of you other guys bought some, but I think this is a perfect example, right? So natural gas has run into resistance at the same place it hit resistance at the end of May. So if it doesn't break, there's a good chance it's going to go lower, right? And I would say it could drop from 930 all the way down to 9. Might not sound like a lot, but that's a move that could happen in one day. And if it does, then we have this ETF that we can trade, which goes higher. It trades inversely to the price of natural gas. So when I first started doing all this, these ETFs didn't exist. But if natural gas goes down by 1%, this will go up by 2%. So it's up by 65 basis points today, which for one day is, I mean, it doesn't sound like a lot, but that's a decent move for one day, 65 basis points. I mean, if you could get that every day.
All right, everybody there on the Zoom chat and on the YouTube chat, just know that if you do want to join the trading school, we have a 7-day trial, $7 for 7 days. You can click the link, we put it in the chat, and after that, it's $14.97 for the year. I think it's great. You should give it a shot when you're starting out if you're new. And we're going to have Mark Putrino here in a little bit, folks, so just keep that in mind.
The oil squeeze is on till November. I'm not saying I would disagree, but I don't know, man. I don't know. I don't get it. Yeah, you see, so this is what's a little bit frightening, right? we looked at this morning, in that this is a logarithmic scale here. All right, let me get rid of that. So this is, just another thing to brighten your day. So we've been trending higher, but it actually looks like, to me, the trend is accelerating, because we had this trend here. Right. And remember, this is scaled by percentage here. So this is an apples to apples comparison. So it seems like we're starting to trend higher or we're trending higher at an accelerated rate. So over the last month, what's today's date? The 7th. All right. So over the last month, oil's gone from 100 to 118. So that tells me that over the next month, you might see gas prices go up by another 15 or 20% or so. All right, guys, let's get any other questions. I got to wrap it up. I got some stuff to do this afternoon. But tomorrow morning, our class is on, what is tomorrow? Wednesday. Tomorrow, we are going to talk about trends. How to identify trends, how to identify when trends are changing, and so forth and so on. And God. All right, guys. I will see you all tomorrow morning. You're welcome, Jess. Have a nice afternoon, everyone.
Okay. All right. Sorry, Dennis. I didn't know I was on mute. So yeah, I got like 3 platforms right now, folks. But basically, for those of you guys that didn't listen to it on the YouTube and the Zoom side, we are waiting on Mark Putrino, the former hedge fund manager. The class that we had today was pretty much like a sneak peek of what he does throughout the day. However, we are going to bring him live to the session. He has the links. I'm positive. So he's going to be joining us here today, folks. But this is where you, in the meantime, while he gets set up and all that stuff, really quick, guys. So for you guys that are watching this, keep in mind, you're looking at the live session here. In the video library, you can find all of the recordings of all of Mark's classes, chapter 1 to 8, all of them. You can find it there. Investment psychology, introduction and philosophy, investment strategy and trading systems, momentum, trends, levels, all that sort of stuff, right? So you have all the recordings available. If anybody on Zoom or YouTube wants to join, just click on the link. It's $7 for 7 days, and you can trade with Mark. You can learn with Mark, so you can be in the live classes with him and be part of a great community. We do have live trading chat rooms. It's pretty straightforward right here. You click chat. You have all the student trade idea chat rooms, right, where the students are posting their trade ideas. You have the questions for Mark. So if anybody does have a question for Mark, Mark's trade ideas, all that stuff, right? So you have access to all that and Benzinga Pro. In the meantime here, I believe Mark is already done with the class, and we can go ahead and check again. Yeah, the class is done. So basically at this point, we're just waiting on Mark to get set up here. Second. Yes, yeah, it does include a laptop after you. So if you want to stay after the 7 days, which is 7 days for $7, after that it's $14.97 for the year. It comes with a laptop, and that's for everybody that joins, right? But you get Benzinga Pro and you get the live classes, all that stuff included. And you guys already saw how the trading school is live, the video library, your chats, all that stuff. In Benzinga Pro, you can also pull your charts. But okay, so it looks like Mark has the link. We're pretty much just giving him a minute to get set up. Right. So I have Mark here. I need to send him a message. Right. So he is in the process here of getting inside this thing. Mark Putrino, let's see, I don't see Mark there, but he's going to pop in here any minute. We're pretty much just waiting for that. And what you guys are seeing right now, well, for you guys that can see, this is Benzinga Pro. We're currently looking at a stock here called MULN Technologies. It's like the EV battery company. I just have that pulled up here in the meantime. But from what I understand, well, this company was actually interviewed by Benzinga, and they interviewed the CEO actually. I think it was Spencer. So from what I understand from the recent, it's MULN, the ticker. So from what I understand, from that particular, I guess, interview that he did, he stated that by the end of Q2, he's going to announce a major Fortune 500 company that they have delivered vehicles since May 12th for like a pilot program. And he said that they are working on a PR with a Fortune 500 company. Who? I don't know. There's no idea. I mean, who could it be? It could be Amazon, UPS, FedEx, I mean, Ford, General Motors, General Electric. Who knows, right? There's a lot of money being poured into that particular sector. But basically, that was what he said on the interview. So I've been taking a look at the stock. I don't know when the PR is going to come out. Obviously, nobody knows. But he did say that it's going to come out before the end of Q2, which would be by the end of June of this month. The other thing that I remember the CEO said was that he was in discussions with some major OEMs for their battery technology. So more recently, I can show you here on Pro, if you just click news, you get all the news from all sorts of places. But basically, you'll be able to see if, okay, I think Mark is getting set up here as we speak. But I just want to show you this really quick. On Pro, you just click news, and it's going to basically give you all the news from all sources out there. And from what I understand, a couple of days ago, they announced that their battery technology from the Battery Innovation of Indiana, the results came in and they showed that their solid state polymer battery cell testing exceeded previously stated values. So these, and apparently if this ends up working out, it's going to be a 600-mile battery. So he is in discussions with major OEMs regarding the battery, but they also have a car. It's pretty sweet. You should look at it. It looks really nice. But yeah, that's a company that was interviewed recently in Benzinga, and you can find the news here, right? Whenever you have questions about a company, let's say if you want to check, something out about them, what they're up to, you can always do that in Pro, and it's clear, cluster news. Like, this is raw data, pretty much, right? You can also do your charting, find peers. For example, we were looking at the chart, and all you have to do is click on details here at the top. But yeah, we're pretty much waiting here for Mark. We sent him the link already. He was getting off the trading school class, the live session, and he's going to be here with us live. So he wasn't going to do this, but he really does love what he or does, right? And he's going to be here with us. So I apologize here for the little wait, the little technical issues. But we're going to get Mark here set up, I'm pretty sure, right now. So he has the links and everything. And yeah, so there's other stuff you can do here on Pro. You can pull up a scanner, all that sort of stuff, set the stocks that you want to talk about, not talk about, but like kind of trade, right? So that's all. So you have that, right? If you want to find stocks to trade, day trade, whatever it is, you can do that in Pro. And even if you want to find swing trades, long-term trades, all that sort of stuff on the short and the long side, you can do that on Benzinga Pro. And for those of you guys on Twitter that are asking how you can join the school, just click. There's a link on the top of the Twitter space. All you have to do is click on it. It'll take you to the session. It's $7 for 7 days, and from there you'll be able to join for that trial period. If you want to keep it, it's $14.97. It does come with Benzinga Pro, and you do get a free laptop as a courtesy, right? So that goes for everybody that's listening out there. And in YouTube, it's in the chat there as well. What up, Beach Bum? How we doing? Good to see you there in the chat. All right. So, all right. I think we have Mark Putrino here. He didn't tell me he was here, but apparently he was there. There we go. I think we can get him on. Hey, Mark, can you hear me?
Hey,
Hey, man, we did it.
hey, how's it going?
Good, man. We got this done. I'm glad we were able to get this connected. All right, so we have Mark Putrino in the house. Everybody, thanks for waiting on Twitter, YouTube, and a couple other places there. Zoom. Shout out to all you guys here. So I showed you a little bit of the Benzinga Trading School live class, right? And now I brought the man himself here so that we can actually go ahead and talk about a couple things here that not just he's looking at in the school, but a couple of stocks and things like that, right, with the crowd. So how are we doing, Mr. Putrino?
We're doing good. We're doing good. But we think that the market is probably not going to stage any type of a meaningful rally until a couple things happen. And we got to see some positive action out of Apple and Microsoft, and also in the financial sector. So I can show you the chart if you have time with what I'm looking at. But it just seems to me like we're kind of the path of least resistance is to the downside. So I'm just going to share my screen, Rodrigo, for a minute here.
Yeah, let's do it.
Okay. And you could just, let's see here. All right. So one of the things we do in the trading school to look for ideas is we look at various sectors. All right. The S&P consists of, the S&P 500 is the broadest benchmark, I guess you could call it. Well, yeah, actually, that's definitely what you call it. The S&P is like the broadest benchmark, and it consists of 11 different sectors. So sometimes by looking under the hood, so to speak, at the various sectors, we can get some insight into what's going to happen in the market. Now, this is the financial sector. This particular ETF, XLF, follows the financial sector. Now, one of the things about markets, and today was our class on levels, how certain levels are more important than others, is that levels that had been support can convert into resistance. And we saw that here. And that's what happened. And that's because of buyer's remorse. People buy here, they buy here, assuming they didn't sell it. Once it goes below their level, they're looking at a loss. And a lot of people tell themselves, you know, I want to get out of this, but I don't want to take a loss. So I'm going to try to sell it at the same price I bought it at. In this case, it would be 36. So as a result, you have a lot of sell orders up around this 36 level. So it's going to take some work for the financial sector to get through that. I don't think it's something that would just blow right through in one day. I mean, if it is going to break through, it probably will take at the very least a few days, if not a few weeks. So that's really important because the financials have a big impact on the rest of the market. And then we want to look at Apple here because Apple is trading below this important level here, which is 151. All right. So we can see here, and same thing, important levels. This level was support. People bought it here. Now, assuming they still own it, it's lower. There's a lot of people who are remorseful buyers now who are telling themselves, hey, if this gets up to around 151, I'm going to sell it. And as we can see, it has been resistance. So we got financials below resistance. We got Apple, which is the biggest company in the market in terms of market cap, below resistance. So that kind of doesn't bode well for the broader market, Rodrigo. Yeah, and here we have Microsoft testing this important 270 level. So maybe here we get a first sign that things are going to move higher. But I just think that with Apple below that resistance and with the financial sector below resistance, it just seems like the path of least resistance for the market is to go down. So, I mean, I'm not saying like market's going to crash or anything like that, but I have a hard time picturing the stock market rallying if Apple and if the financial sector aren't involved. I don't think we can get a really sustained, sustained or meaningful rally unless that stuff happens. But it might happen. So we'll watch the market. And if we start to see that resistance starts to fade away or give away, then we start to look for appropriate trades that we can use to profit from it.
Yeah, and look, even though the markets can be pretty wild, there's always opportunities there, even in small caps. So look, you traded with Mario Gabelli, Steve Cohen, and so you've done like these small cap stocks when you traded with these guys. And an example of that would be, we were talking about Husa, that energy company when I got, like at $4, something like that. That's one company in energy where, I mean, that's something that like traders can get into, right?
Yeah, we talked about trading the reversal on this actually in our class today. So it looks like it's reversing.
Yeah, and then the other stock that I think we kind of maybe we talked about it, maybe I think it's a month ago, but it's this company, the MULN Technology. If you could do some sort of analysis on that
What's
stock,
the symbol?
MULN.
Is this Mullen Automotive? Oh, okay. Yeah, I'm having a hard time hearing you, Rodrigo. All right, let's see what we can see here. All right, so it's been a little choppy or volatile, but we can see that we got support down around $1, which is not surprising because people like nice round levels, right? So it's not surprising that we found a floor at $1. And now it looks like we're trending higher a little bit. So here's the thing, even though we have this choppy action, right? We have to understand that we're still trending higher. You can have a day that's down, but still be in an uptrend. All right. So let's look at it like this here. I mean, I know it's kind of hard to see, but this is actually, let me go to our logarithmic chart. That might make it easier. Yeah. Okay. So you can see it clearer here, right? So we've had this choppy behavior, and you can see today it's down 6 cents, right? But when we look for trends, notice this. We're higher than where we were 2 days ago, and where we were 3 days ago, and where we were 5 days ago. So we're starting to put in a higher trend here. So, something like this, I could see the volatility calming down and it just continuing to trend higher. And that's kind of what you want, is the stuff that goes higher slowly, because if it really rips higher fast, then it could really come back fast as well. So it looks to me like we're putting in a bottom here and forming a little bit of some kind of an uptrend here.
Yeah, can you hear me better now?
Yeah, I can hear you better now.
Okay, yeah, so we're doing well. I mean, we are live on Twitter as well, just for you to know. So that's probably why I was messing around with all these things. But yeah, man, I mean, look, I really like the fact, Mark, that you can actually discuss trade ideas, because yes, it's called the trading school, and we're learning every single day. But more importantly, people learn about either their own trades or what trades to make, which ones make sense. And also you talk about their own trades as well throughout the class, like we saw, right?
Yeah, a lot of our best ideas come from our students. So there's a lot of exchange.
Yeah, and yeah, so guys, the classes are well, it's Monday to Friday, but keep in mind there's a 7-day trial for $7. So if you want to give it a shot, I don't know anything better to put in these $7 and then staying. If you want to stay after that, it's 14.97 for the year with the laptop, but that's just for now. By the end of the month, it'll be about 2,000 folks. So Mark, as far as the class today, what was the chapter of the class that you guys were going through?
We were talking about the price levels, how certain price levels are more important than others, and how stuff can stay in important for a long time. Like I'll just give you this example here: CVS, right? I don't. We didn't talk about this particular stock today, but it's a good example of this whole concept of how some price levels are more important than others. Now, what we see here, when we went back to here, this is where we reported earnings, or CVS reported earnings back in February. And look at where it ran into a resistance level, the same level that went back to July and August of 2015. So just say you bought the stock at 100 and you told yourself, hey, if this gets to 115, I'm going to sell it. Well, guess what? You would have missed it because you didn't know that there was this long-term resistance there. So this is a good example of how these things can stay intact for a long time. I mean, we're talking about, almost 7 years here. And then down here on the bottom, we can see this clear support around 52. And this went from March to March of 20. So this was a year. So if you can identify where these important levels are, it obviously, you don't need to be a market guru to understand that that can help you trade. Breaking support, starting to trend lower, right? Hit resistance, we roll over. Break resistance, we move higher. So knowing where the important levels are, it's like having like a map to the market, right? Look at this: resistance becomes support. This is something you see quite often: resistance turning into support here. But yeah, by keying in on what levels are the important ones, then that dictates where we find our trades. You don't just go into the market kind of randomly with guns blazing. We look at the market agnostically every day, and if we see an important support level breaking or resistance level breaking, they tend to be followed by pretty big moves. So that's what we're looking for. We're letting the market tell us what to do, as opposed to kind of just guessing and hoping that we come up with something good. Because as humans, we can be wrong, but the market can never be wrong. So yeah, so today was our levels lesson, Rodrigo. And
Yeah, and I think, and look, I know it's not right now, but I know you have a class called Investment Psychology, and that's my favorite class. I think it's important that, well, I mean, it's just not even discussed, the investment psychology part of things, and like, for example, there are trades, Mark, that, ultimately they could have gone right if you wouldn't have been too emotional about sticking to your plan. And that's just really one instance, but there are so many instances where the investment psychology comes into play. Whereas you can teach all day and preach all day, and you can listen, pay attention, but if the investment psychology part is not there, nothing's going to work, man. Right?
yeah, you got to have the discipline. People think success is like coming up with some secret system that always works, and I can tell you that's not the case. The greatest traders in the world lose money on a lot of their trades. It's just that they have the self-discipline to cut out of their small losses, or get out of stuff while it's still a small loss and not let it get big. And they also have the self-discipline to not take their profits too soon and wait for things to get to the target. So it's easy to trade on paper, but trading in the real world with real money brings your emotions into play. And that is ultimately what leads to the downfall, I think, of most unsuccessful traders. Like, the most common reason I get when I ask people, like, how come you lost money, is, well, I guessed. They didn't have a logical reason for getting into something. So guessing is an emotional decision. You see something in a chat room somewhere, or you have a fear of missing out type thing, or you sell at the bottom because you're panicking. So yeah, investment psychology is definitely part of the picture to be successful, Rodrigo.
Yeah, and that's typically where most new traders fail, right? I mean, including myself. I blew up my account twice when I started trading, and obviously, I wish I had a trading school. I wish I had something like that, but we didn't have anything of that sort. So Mark, look, we have about like maybe 10 minutes or so. What are some thoughts? I want you to talk about the trading school. We've been here all waiting for you all this time. I know you just got out of class, but we don't have a lot of time here, and then I know you have to go back to do some stuff there. What are a couple things you can leave us for the folks on Twitter, Zoom, YouTube about the trading school and why they should give this a shot?
Well, I would say you should give it a shot because, well, I'll put it in these terms. Like, I looked around when I was first figuring out how to start this school. When I met you guys, I looked at a bunch of these other trading schools, and I mean, unfortunately, in order to have a lot of experience, you have to be older, right? But I see a lot of people out there that are people that have only been in a bull market. They've never been through these bear market declines because they're younger. They don't remember what it was like in 2008 and 2001. And in addition to trading for Mario and Stevie, I was the head of trading at 3 different institutional money managers. So I've overseen, I mean, I've seen it all. It would be hard pressed to find something in the trading world that I don't think I've seen before. So I bring this, a lot of experience to the table that I think that some of our other competitors don't have. And we've actually, without mentioning names, there was actually one of our rival trading schools, so to speak, just had to pay big fines to the SEC for misleading their investors or misleading their students. So that's the type of thing where they probably on the way up, things were easy because the rising tide lifts all boats, but then things turn around and start to roll over, and all of a sudden it's not easy. But what we'll find is that for a lot of the students find, and I wholeheartedly agree with this, it's easier to make money on the short side of the market than to be long, because things go down much faster than they go up. And that goes back to our market psychology. Things go down because people are afraid, there's fear. And things go up because people are hopeful. And fear is a much more powerful emotion than hope is. So right there, we see the example of emotions, right? That's why markets go down faster than they go up. So it's easier to make money on the short side, and you don't necessarily need to short stocks, or you don't even necessarily need to buy options. There's a whole slew of ETFs that are designed to move inversely to the market. So if the market goes down, these ETFs go up, but they go up faster because then the market would typically go up because markets move down faster. So if there's a really ugly sell-off going on, there's going to be ETFs that are trading up as much as the market's up. They're double leveraged inverse ETFs. So if the market's down 2%, the double leveraged ETF would be up 4%. There's triple leveraged. So if the market's down 2%, these would be up 6%. So there's a whole variety of different tools that we can use as traders, which are really great. Frankly, they didn't even exist back when I first started. And I think it makes our life a lot easier as traders, because like some of the price levels I just showed you guys that were so clear, they didn't really, I mean, obviously support and resistance existed, but you didn't see these things, these big stocks come in within pennies of each other in terms of the support and resistance like we do now. So, it's not just about trading, it's about understanding the markets, and it's about understanding the best way to deploy your capital. Like, what's the best bang for your buck, so to speak. If just say it happens that it looks like the financial sector is going to break that resistance and move higher, well, there's that financial sector is the or that ETF is the aggregate of all the stocks in the financial sector. So we could go through this particular stocks and look for things that look like they're going to break out the most, or that are going to move the most. So we got to understand the markets. The markets act differently at different times. We have to it's not just about understanding like this, oh, here's a secret trading strategy. It's about understanding that the markets act differently at different times. It's about understanding how important investment psychology is. And it's about also knowing what's the best place to deploy your capital. Like if that financial ETF breaks out and goes up 1%, there's probably financial stocks that are going to be up like, say, 5%. So that's something that we would look at there. So most efficient use of capital is an important idea too.
Right. Well, I mean, absolutely, Mark. Well, thank you for being here, man. I know it was out of schedule as usual, but you know, your passion here for helping students is great. It doesn't know any boundaries, man. The school is international, so that's great. So look, that's gonna wrap it up here for our session on YouTube and Zoom. For the folks on Twitter, give us a minute. I'll be right back here in a minute. But also keep in mind, guys, that if you do want to join on Zoom, Twitter, wherever it is that you're seeing this, on Twitter, there's a thing on the Twitter space, $7 for 7 days if you want to join the trading school. And if you're on YouTube, it's on the chat. And if you're on Zoom, it's on the chat as well. I'll see you guys on the other side of the trading school so you can trade and earn and learn with Mark Putrino. That does it for the day, folks. Thanks a lot, Mark. And I'll see you.
All right, Rodrigo. Thanks you. Thanks, everyone.
All right, folks. We're gonna put this link here and we're gonna close this thing out. 1 second on Zoom and YouTube, guys. All right, so thanks a lot for being here. We'll see you guys next time. James Broker, I see you there. What up, dude? All right, folks. We'll see you next time.